This episode is intended exclusively to provide information and education to help individuals better understand cycles. However, this information is not be construed as professional advice as to the buying and selling of securities or other investment instruments. In no event does the host express any opinion with respect to or make recommendations regarding the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading securities. Buying and selling decisions are solely within the personal discretion of each individual.
From the mind of Lars von Thienen.
Welcome to another episode of Cycles TV. This was an abrupt start, but anyhow, if not today, which day else should we talk about semiconductors, Nvidia, and that stuff? So, I've not pre-selected that, but is it really a surprise seeing the semiconductors diving by 10% a day? Are we surprised as cycle analysts here? So let's review that from the perspective of cycles. And anyone who wants to get a preview, we did that back in November here. So this is an update or just a review on those cycles. Anyone else is recommended review the November session anyhow.
And baby, you've been flying too high.
I told you that in November already. So talking about cycles, this is not coming by surprise. So at least you see what happens if we are in that cyclic condition. But what cyclic condition? Let's talk about that today. So first, I will talk about the broader index. So let's have a long-term perspective on the semiconductor index before we drill down into shorter time periods. So what we see here is the semiconductor indices for the US stock market on a weekly scale with the long-term perspective here using weekly data, right? So, and we see the latest data from today is even in that weekly data set where we had that down move today. So, but that's the weekly scale, latest data. And at the bottom, we can observe our spectrum on that plot. And that's a very interesting spectrum because, it's quite obvious what we need to talk about from a weekly cyclic perspective. There is one dominant cycle with 180 weeks length standing out in the spectrum. So there's no other decision to make. There's no other peak to the left. There's no other peak to the right. I just used the standard settings we apply here at the foundation. So using 850 bars as a starting point for that kind of analysis. So nothing special. Pure basic standard setup as we use it here at the foundation. And that spectrum is really interesting because the right shoulder is going down to zero, the left shoulder is going down to zero. There's one clear peak, 180 weeks is so important. I often refer to that cycle. It's about the 41-month cycle, but not touching this today. 180 weeks is interesting. So let's have a look in particular for that cycle. Maybe let's adjust here. So first, I think the long-term perspective, let's view that in log scale. It will not change the spectrum, but we'll make that a little bit more interesting here. So also activating the 180-week cycle here. And as you know, we are talking about timing here. So what we are connecting is the lows with the timing points of that cycle. And I often recommend doing this kind of quick cross-check on just using the timing of those cyclic signals in correlation to the data set, which is then, by the way, here we have a double low to the left, to the right. But anyhow, let's go to the center here and then again the upswing. So this is how you read a cycle here. And this reveals that we are on this upswing here, and then we have the upswing and downswing legs. And in almost all cases, the reversal point was indicated by this long-term 180-week cycle. So that's why this is so important here. And we can now move forward to the current picture of that cycle. And this is why we talked about that in November. Yeah, so this is why I brought this long-term and short-term perspective back to you, because this long-term cycle, which is anyhow important, but obviously perfectly seen in the semiconductor index, topped out November 2024. So in general, what we see since late 2024 is a very perfect behavior I would like to observe on those important cyclic tops anyhow. So, and a surprise would be to the upside, not to the downside. So if we are now in that cyclic condition, or that the main theme for this market has rolled over, so since 2023, we have been in this upswing here, but now 1.5 years later, at the end of 2024, this whole cycle reversed direction to the downside. So the primary trend should roll over to the downside. So any surprise should be to the upside, not to the downside. So, and I mean, we will move over to daily and short-term analysis just very briefly, but that's just the first indication that any down move seeing here with unexpected downward pressure is not really surprising. It is just more confirming that the larger time picture has changed for that industry. But okay, that's the long-term perspective. Let's also move forward to the shorter term daily perspective on that. So therefore, let's move just to the daily data series, which I've just shown here. Let me just remove the energy model here. So this is the daily data. By the way, here I have anchored the starting point here to that major low, similar to where we did it in a major analysis here, but that's nothing really important here to see this whole up leg. We see the spectrum at the bottom here. In that case, the spectrum is not as simple as it was on the weekly data series. So here we need to spend a little bit more time on thinking about which cycles would be important and would be important to pick here in that case. So we could use the ranking mechanism, which is shown here to the right. So this is an indication by our AI, not calling out any names here, helping us to interpret or read the spectrum the right way, and by all other data sets. So I will walk you through the process. Looking at the spectrum, I mean, let's do this jointly here first. We could indicate 1, 2, 3, 4 major peaks in that spectrum just from a quick visual inspection here. So the shortest one around 79 days or 80 days, which is almost on top of the list. Yeah, so that's the most, from a strength score, the most important cycle here. So this seems to impact price the most on a short-term scale. And then from the visual shape, that peak looks very nice. So that is the cycle we need to take into account. The second cycle then is showing up here with a length of 127 days. Yeah, which has also a nice visual shape, ranked as number 3. And strength is also good. Bartels, as for the first one, does not look so good. Same here to the third one, around 200 days. And then the fourth one, 288 days here to the right. From an amplitude perspective, this stands out. Also from the visual shape, it stands out. However, the strength score here is more on the lower end, so we need to take care. What strength means is, it means that the strength has not the highest impact on past price movements in the series. So even though the cycle is prominent in the data series, it does not have the highest impact on price movements. So you need to take care of that measurement, as the cycle might be there, but from the price oscillation of the data set, it might not be so dominant. So, and if you trade price, strength for sure is an important measurement. So you always need to combine those measures. Okay, so these are the 4 cycles coming into further consideration. Let's start with the shortest cycles. By the way, or just for fun, I've picked another method for visualization. Maybe let's use that today. But it's only visualization, so you could change in the configuration if you want to see a theoretical sine wave. Just deactivate zigzag. So this is what every cycle analyst mainly is doing. Or you could switch this to a kind of zigzag plot. Some favor zigzag plot. I do not favor zigzag, but to give you also a different kind of visualization, we could switch this on, which means it shows you the same cycle just in linear terms, going straight from the top to the bottom without the sine wave shape, which is anyhow a theoretical representation. So in general, it's just the same. So this is the 80-day cycle, which seems we are close to a peak or approaching a peak quite shortly. And yeah, same procedure. You need to cross-check major bottoms and tops in that market. So this is not the only single cycle I would rely on. As you see, it's not always on. So a single cycle here, at least 80 days, is not really reliable on that data series. So let's also use the 127. And you see here how the zigzag plot looks different in a composite style. So that's also interesting to see. Let's make this bigger here. So it's just the same, not stacking up different sine wave plots here. So instead of stacking up the individual zigzag plots here. So that seems to be more in favor of the price action. So those 2 cycles seem to have a more correlation with price moves here. So if you zoom in, you can see how this better correlates. So just picking those 2 cycles seems to have a very nice spot on major bottoms and peaks. So this is what I anyhow prefer, not too many cycles. And so let's bring also that longer term cycle, as we just need to be aware that it might not have been the highest impact on price. But anyhow, what I always said, the most important topic to watch in cycles is the next upcoming expected change in trend. We never look into a static forecast here to the right, because cycles, and even if we have selected a composite, that's even more important. If you select composites based on short-term cycles like the 80-day cycle, you need to realign that setting. So what's most important is the short-term next 1 or 2 turning points. But first, let's have a look at that composite. These 3 cycles seem to have a very good explanation of recent behavior for the past 5 years on daily data. So this is what I like to see, not more than 3 cycles being able to explain major moves here. And the upcoming projection is that we are again close to cyclic top. So early February, so we have end of January now. So I think it's next week setting up. So from the ideal timing perspective, but it's with the theoretical top here. So we are nearing that, and then expecting another daily down move into end of March. So said that we had a perfect top here in summer. You know the long-term cycle here rolled over. So every past upswing we might have seen, or even the final topping period, then moved into a kind of sideways movement here. And now the next possible point where we have a short-term top is beginning of February. So now or next week, how exact you want to have that timing here, which in the end shows you that a down move happening from a long-term perspective and from a short-term perspective is pretty much what the cycles anyhow suggest. So, or the upswing, not really the upswing, but from what we have seen here since December into January, so the final up move here, which has been on this cycle here, so is also perfectly what would have been to be expected. But now, and maybe we saw just the beginning of that, it would be no surprise that even more downward pressure comes into alignment at least until late March. So the next 4 weeks, the next 8 weeks. So we have February and March. So the 8 weeks seems to have the daily cycles on the semiconductor turning negative in alignment with the longer term weekly cycle on the semiconductors, which is already negative since late 2024. So that's, from a cyclic perspective, that's what I'm trying to say. It's no surprise what we're seeing now at the markets if this top arrives. And it's even more confirming because if you are in a condition where the long-term cycles has rolled over from up phase to downward phase, the market participants might be surprised by huge downside moves. But this is what you would expect if some kind of news, which is what happened over the weekend, if some news are coming out, it would amplify and accelerate in direction of the cycle. So what I'm trying to say is any positive news on the semiconductors would have maybe just lead to a continuation of the sideways movement we have seen since summer last year. But now any negative market comment, what will come out, will see a push to the downside. So it will be very hard anyhow in those downward phases with positive statesmen pushing up. So it will be more keep the status quo, or you must have positive news to keep the price level even sideways. While in this negative cyclic condition, any negative news will trigger a move to the downside. Not surprising for any cycle analyst, maybe only surprising for market participants who are still thinking in the old regime of an endless upswing cycle. So, and from a cyclic perspective, we have been forewarned on that. That's the semiconductor index from a cyclic perspective. Just to complete the picture, let's now switch to a technical chart, because if you are interested in taking some trade ideas out of that, which is not what we're doing here on the show, I just want to guide you what you should do. Always switch to some technical analysis once you have a perspective of the cycles, because you are able to improve your technical indicators by using the information what cycles are active. So timing-wise, you have one information, what to expect, what's the main setting. Second, that's then also fine-tuned then from a technical perspective. And this is what I will show you here. This is just a pure price chart on the semiconductors on the top, nothing special. And at the bottom, you see a cyclic tuned RSI indicator. That indicator is available for the public on TradingView, so nothing you need to be thinking about. So freely available cyclic tuned RSI indicator. It's available for you. This is just optimized from a visual perspective, but the same indicator is available for free on the platform. So it's a standard RSI indicator, what you're seeing here, and this is what I want to take your attention to, is that it has two parameters here. So first, and that's the basic length parameter for any technical indicator, so nothing special here. So I'm using, and this is the recommendation, what you should always do, use half of the dominant cycle length. And as we are dealing with a daily chart here, so on the daily chart, the calculation of the relative strength index is set to 40, because the dominant cycle was 79, so 80 divided by 2, use 40 on the daily. And the background shading, or the background color you see on that indicator is based on the calculation on the weekly data. So it's just the same indicator, a relative strength indicator on the weekly semiconductors index. You know the dominant cycle on the weekly is 180 weeks. Use half of that, means you set it to 90 for your calculation on the weekly RSI. That's it. The way it is visualized here is that the situations where the long-term, so the weekly indicator line is below the lower band, is just shaded in green. So they are just oversold informations on the long-term indication. And red shaded backgrounds is just when the weekly indicator line is above the upper threshold from the relative strength. So also basic reading of an RSI indicator, you just see it from a visual perspective more easy. We are just plotting at the daily. We are just indicating the times when also the weekly is overbought and oversold by this colored background. So, and what you are looking for is when you see short-term, so daily signals in the time zone, so in green or either red areas, which means that the weekly indicator is confirming a possible signal. So in these, let's start here in the green shaded areas, this is when the weekly indicates that we have an oversold market. So you then look out on a short-term basis when the daily indicator triggers a signal here from crossing below the lower band to the upside. So at this point here and at this point here. So you see exactly at those lows on those markets, we would have received buy signals. Same here. So this was the sell, buy. This was not a signal here because we just had the weekly, but no indication here. So that's it. Then the next time period. So this was 2022, right? So we have a daily series here. We just had the 2022 signal, and then it only showed up for the first time also on the technical perspective back in July last year. So this is, and we know this clean signal on a technical indicator is only possible due to the fact that you adjust the length of those technical indicators according to the length of the dominant cycle. Otherwise, you would see a lot of whipsaw signals on technical indicators, which will ruin any single strategy on that indicator here. But what I'm trying to make is this was anyhow last year already, the long-term cycle topped out, and we have seen the weekly and the daily signal here. But what we're now seeing here on the short-term perspective is that at least from the daily perspective, we have triggered another short-term sell signal here, which would indicate that maybe this short-term top expected for next week, from the cyclic pure timing perspective, from a price-based perspective. And that's why you always need to take into account time and price, that from a price point perspective, that top might have already arrived. So we see a left translation on the daily cycle, just putting that technical analysis into account. Also looking at your comments which you are putting in the section, and Franz, that's thanks for bringing that to the attention, so that we have some cycles also going on here around us. And you are talking about the equinox showing up about the 21st of March. So there are a lot of interesting constellations showing up between the 12th and 21st of March. So this could be anyhow become a hot date based from what you are mentioning here. Thanks, Franz, for bringing that in. Yeah, and anyone else who wants to ask some questions, feel free to drop in your points into the live chat section, because this is what I'm always trying to do here live with you. I'm also getting back to your questions because we want to learn something on cycle analysis. Okay, so maybe Bruno, as this relates to what I've just shown, the red and green zones. So those do not show up in advance because they purely are based on price information. So you can only calculate a red or green area once you have the price on that day or that week. So the red and the green has nothing to do with cyclic timing information, and you cannot plot them here. You could roll over the cycle as an additional visualization on a technical chart. So let me show you that idea, Bruno. So what we could do, we could export the information here. Let me show you how this works. So we have a feature which allows you to export whatever cycle composite you have created. I will do this now. I will copy this now, and then I will move over to the price chart in this platform here. And then there is an indicator available, which is also free. We call composite plotter. And if you activate the composite plotter on this price chart, which I just did, here you see the composite cycle vector, and you remove that data and you just paste in the information I have grabbed from the previous screen. So I need to remove everything which is in here first. So let me do that. So clean up the composite vector, and now I press just paste, and all the information I've just copied is pasted in. Now you see the cyclic information has rolled over now to this screen. So I think, and now you have two informations here regarding time. So you see, on the one hand, you see exactly this forecast, which we have generated based on our cyclic platform, now plotted on top of that information here, which actually shows you the expected top here at that point in time, and then the move down into 21st of March. This is the cyclic information, and you see just that the cyclic information matched up with the price information which the indicator at the bottom gave here. So that, and this is the perfect indication you want to identify, right? So you have a sorry, oh, I'm messing it up. You have a timing information, so the timing window is here, and you have a technical information happening exactly at the point of time of that indicated cyclic top here. So let's move that away. So that's the timing information at the top here based on cycles, and this has been in alignment with the weekly and the daily. So that's more or less the perfect signal you can expect to have. So what you now need to look out, as I said, maybe here, that sideways move is more or less in that downward period. So we are rolling over to the negative. Correct. The tops are, as the questions are rushing in, let's make this a little bit interactive here. So the tops and bottoms on that indicator are just of the cycle, right? Not of the expected prices. Correct. The plot at the top is just the pure cycle plot, and this has nothing to do with price targets here. Also be careful when plotting that kind of information. This is pure timing. This does not mean we're making a higher low and then a higher high here. That's not the case. This is just a pure cycle. You can even scale it and plot it in a different way here. So this is pure timing. And don't read this as in higher low and this as in higher high price-wise. We don't know yet. And more important, you anyhow need to set this into context of the longer term cycle which have turned down. So if you would bring that cycle into play, this would anyhow result in an even lower low here and a lower high here. So don't read the visual shape of that composite with any clue on price targets. It's just pure timing. If you are from a price-wise in that period, you use the technical indicators, whatever technical indicator you favor. And by the way, the principle I'm just outlining here, improving technical indicators with the length setting derived from the dynamic cycle, will improve any technical indicator you're using. This is just one I'm really used to, and I like to do that. Okay, yeah, thanks for your questions. To explain this a little bit better, so maybe now let's do the same analysis on Nvidia, as this is more or less the spot of the semiconductors, at least in the US. So therefore, let's switch to an Nvidia chart. Let's clean that up first. So here we see Nvidia with latest daily prices of today. And let's start with the weekly first, right? So before we jump on the daily, let's do it on the weekly first. So this is, it's quite interesting to see Nvidia that way. Yeah, that's not so. Okay, so here we have a good example where from the weekly perspective on Nvidia, this spectrum is, in short terms, useless. Why is this useless? Because, and I will compare this to the semiconductors in a second here. I mean, there is the theoretical or mathematical peak at 181 weeks. Yeah, you see it also here in the table. However, you see to the right of that peak, the right shoulder of that peak in the spectrum is not going down to the zero line of that scaling. So this means to the right, and this suggests the cycle analyzer is quite not sure if there might be other longer term cycles to the right, because otherwise it would be quickly go down to zero if there are no longer term cycles. And if you see this kind of flat plateau in a spectrum, the mathematical derivative of seeing this as the most highest amplitude does not really give you a clue about, is it really 180 weeks, 200 weeks, maybe 310 weeks or something like that. So that spectrum, at least for the longer term weekly cycles, is not usable. So therefore it's quite good. And by the way, this is a very good example here. I've not prepared this in that way. But this is one reason why I often recommend be careful when analyzing single stocks for cycles, because single stocks are or have a lot of noise embedded in their data because it's just one single stock. So they have a very high relation to single news just related to this single stock. And news related to one single stock, talking about digital signal processing, is nothing else than noise. News equals noise. So all the media hype tries to explain the noise in the markets. So this is because from pure cycle analysis, you're just reading the news for fun, or for just keep some smiling, for just some relaxing events. But really reading the news is trying to read the noise, which for digital signal processing is nothing you really want to do. You want to get rid of the noise. So stay away from individual news related to single stocks. They won't help you in regards to cycle analysis. And that's why these kind of spectrums here then appear, because of too much noise in that data set will then result in whatever digital signal processing algorithm you use. Any algorithm will have problems deriving the real signal in a data series, which has a lot of noise, and Nvidia has a lot of noise in it. So that's why it's then often better to take a larger index, like the semiconductor index here for Nvidia or similar companies, because the noise is just reduced if you take into account the index instead of a single stock. So that's and that's why if you see this kind of a spectrum on an individual stock and you find useless information on cycles, don't try to squeeze something in your analysis, even if the cycle is there. I would not trust this cycle here, just seeing this spectrum here. So if you switch to the broader index and same data set here, weekly data, 850 data points, the same time horizon, but you see what a difference it makes here now on the spectrum. Here we have a clear right shoulder, which is really coming down, and the right shoulder is also coming down to zero. So this is not a flat plateau. This is a picture perfect spectrum here, while in Nvidia, this is not a picture perfect spectrum. So long story short, the weekly analysis on Nvidia does not help us at all because the spectrum is not usable for any prediction here. So even you could, don't do it if you see these kind of spectrum analysis. So let's switch back to the daily. Let's get away from the weekly. So here now we have now the daily analysis, and here the spectrum looks better, right? So here we have, just from a quick inspection, we have 3 possible cycles here again. And that's now interesting. You see now the correlation, 81 days. You might remember it was 79 days in the semiconductor index, 81 as the strongest cycle, and even the most statistical significant cycle. And from a visual shape, also ranked as the number 1 cycle, standing out here, similar to the 79-day cycle in the index, but also can be seen here in the Nvidia data. So which is also now in the second up leg here, maybe topping out February in 2 weeks from now. But as said, from just looking at price, maybe this top is already in. So we have a left translation, we don't know yet. But then we have this longer term cycle of 306 in Nvidia, which is already or still pointing downwards here, and then bringing us to this same or double top here, which then brings the second low in 25th of March. So that's the same short-term observation we have here as we have seen in the semiconductors. I think it was 21st, so that's why you brought in the equinox in March here. That's the same what we see here using the most 2 important cycles on Nvidia. We could bring in the 92, but you see if I click it on or off, and that's why what I try to teach in every episode here, I'm looking at the next 1 or 2 important turns of that composite, which is the first one early February and the second one maybe March. And if I then add another cycle to that composite by activating it here in the table view. So now it's deactivated, now it's activated. From a visual perspective, I keep my eyes here on these positions. Yeah, so I can mark that here and here. And now by just deactivating and activating, I just monitor time-wise if the position of the top, which is now here and here, has a big deviation to the previous one, which is this one here, or not. And in terms of timing, it does not have a deviation. So it anyhow will not matter if I put the 92-day cycles in or not, because the general expectation on having and topping here in February or maybe arrived and the secondary low in March stays the same. Yeah, so that's even what we see here. So that's why the way using those tools is very important, and you won't maybe be able to see how to use these tools without showing them on real data and what someone like me will see when using those cyclic tools for years now. And this is what we want to bring across here. So how do you use cycle analysis tools on those data sets? And it doesn't matter which tooling you use. You can use different tools, but the way how to apply cycle analysis is always the same. So the decision-making process, which cycle to use, which cycle not to use, how to combine longer-term, shorter-term perspective, what to look for, not a static projection into the future, the next important turning points, and then how they vary in regards to if you put more composite cycles in or not. And if they would switch, maybe let's assume they have completely flipped over again if I added the third dominant cycle here, then you should not trust that cyclic forecast anyhow. So you get more confirmation in a forecast if it's kind of stable, if you only use 2 or maybe a maximum of 3 cycles. And then if you just switch one on and off and it stays the same, you get more confidence. If it's completely falling over or the projected dates or timeframes are completely different if you switch on one or the other cycle, then maybe your forecast is anyhow not stable to take this into serious consideration for any decision-making process. That's it for today. So just to sum it up, roll back to the November video, which is down below on Nvidia, and maybe just to close with the same jingle here.
Remember, what goes up must come down, and baby, you've been flying too high.
So it's always good to be a cycle analyst because cycles give us a window of opportunity into the future. And if something happens in direction of the window, we have just confirmation and are not surprised. That's it for today. Have a nice week. Put your questions in. Please like, subscribe, leave a comment, whatever. Thank you for taking the time today with me, and I'd like to see you next week again. Bye.